Gains and losses. We definitely have a whole extra lesson on this, so we've got a lot of more detail to go into. However, we're just going to talk about generally what's included in gross income, and gains and losses for sure play a role. Gains and losses for individual taxpayers typically arise from the sale or disposition of property, such as stocks, bonds, real estate, or other tangible and intangible assets. These gains and losses can impact an individual's gross income and subsequently their tax liability. Now, when calculating gains or losses, the trade date is used rather than the settlement date. Essentially, when did the transaction take place? The settlement date would be, oh, it took a few days for the paperwork to settle, or it took a few days to get the report from someone. Nope, the trade date, the actual date that something happened, the trade date is the date the order to buy or sell the asset is executed. Date, we're using the fair market value. Sell, 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 buy on that date. Whereas the settlement date is the day the transaction's completed. Again, maybe even online systems need a few days to process an order, something like that. Bank transfers, maybe one day, but they take a few days. And the asset is transferred to the new owner. For tax purposes, the trade date determines the holding period of the asset, which affects the tax treatment of any gains or losses on the sale. This means long-term, short-term, which short-term gains and losses have less preferential treatment than long-term, and we'll talk about that in our gains and losses lesson. And if you're thinking, well, losses, right, that sounds like a deduction. Why would we include that in gross income? Well, you net together your gains and losses, and that affects your gross income. So losses are not deductions, rather, they are netted against your gains. Now, the tax event of these gains and losses is realized when the asset is sold or otherwise disposed of. Remember the difference between realized and recognized. The gain or loss is calculated as the difference between the asset's selling price or the fair market value. In the case of disposition, if you dispose of something, you get rid of something, and its cost basis, which is usually the purchase price plus any fees or commissions. Like I said, we will go through this a lot more in depth in its own lesson. Hey there! Are you ready to not only pass your CPA exams, but truly understand and enjoy the material while studying? I know it seems impossible, right? Especially to enjoy the material? We'll do it together. Tap into the power of CPA.examprep.ai, where we've got personalized quizzes, multiple choice questions, memorization guides, flashcards, simulations, all tailored to your learning. Our adaptive study planning puts you on the fastest path to success and lifts you back up if you fall behind. Avoid wasting your precious time and money attempting an exam with a low chance of passing, because who wants that? We want to get you through this process as quick as possible. Our exam readiness prediction lets you walk in with confidence, knowing that you're prepared for success on exam day. Thankfully, there's no payment method needed to get started, so why don't you come join us? Visit cpa.examprep.ai and let's achieve your exam success together.